Hello, it's Adil bringing you an intermarket analysis of the UK and European markets. Okay, so let's start. Okay, so basically a wrap up today, Monday, the 19th of January 2015. I'm still shattered and drained from the weekend run. I managed to complete, I think, around 23 kilometers because I got lost somewhere in Helsby. So that was a good run. Even though it was initially called off due to bad weather, but our coach, who's a lunatic, who has done 6 marathons in 7 days in the Saharan desert, okay, actually, I won't say encouraged, but actually forced us to do it regardless, even though the conditions were not conducive to running and were very dangerous. But that's what a coach is there. He pushes you to your extremes and limits. Maybe common sense isn't used, but I think that's intentional to push us and force us. I was only given one day's notice as well. That was a funny thing. 1 day's notice because some chap dropped out due to an injured leg, and I managed to do 23k. So hopefully I'm gonna try and make it a habit now, and hopefully get back into shape. Less of the burgers and the kebabs. Okay, so let's get back to trading now, folks. Fundamentals. Basically, what happened? We started the day with the Shanghai comp. This is a chart. I mean, just giving you an update on my platform here. So basically, Shanghai comp down 260 points, 7.5%. That's quite a substantial sell-off. I think it went limit down at one point because it was down almost 10%. Okay, mainly due to, from what I understand, leverage, or cracking down on margin on leverage. That's being utilized. Hence the reason why the Shanghai obviously has rallied quite substantially as of late. With regards to the link or the exchange link. So basically that's the situation that we obviously had to deal with in the morning with regards to Shanghai, because Shanghai is a chief in the global markets based on intermarket analysis that dictates things, and obviously that has a negative effect. That's has a negative effect on the commodity currencies, hence the reason why I went short the Kiwi today. Nailed 23 points from that. I shorted the CAC, shorted the Eurostock, shorted the FTSE twice. And managed to make 135 points today. So today was a fantastic day. Very obedient to TA and FA. Very good. Okay. So Shanghai was the main theme. Okay. Then obviously we have the SMB aftermath, the Swiss National Bank, with regards to its CHF move, obviously adjusting the euro peg, and the aftermath of that, because we've had several casualties, such as a hedge fund who actually lost 830 million. We've had Barclays coming out with regards to losses, and God knows how many other losses there are that are being hidden. So obviously that's a negative effect, because if a certain hedge fund etc. collapses, then their positions collapse, and that causes obviously volume to increase and uncertainty, and it eventually leads to a sell-off. And that's exactly what I expected. As you know from my previous weekend video, I expected a sell-off in US markets, and obviously given the fact that the interlink globally, that means European markets and obviously Asian markets are going to fall as well, and that's exactly what occurred. Okay, we had number 2, obviously S&B aftermath. Number 3, geopolitics. We've had movements again in eastern Ukraine, Russia, with regards to further, what should we say, what's the best way of understanding this, altercations, okay, and with regards to an airport being retaken, and Ukraine calling the bluff of Russia in terms of its peace treaty. Then we've had an Iranian general killed in Syria with regards to an Israeli airstrike. So again, the repercussions there, God knows what's going to happen with regards to that. That's not exactly a good sign. Okay, with regards to the ongoing conflict in the Middle East. Okay, so all these concerns again are a risk off. Okay, also adding the fact that there were reports with regards to Greece not getting any Kool-Aid. Okay, not being part of this QE program, and obviously the Syriza party in the lead. Okay, so again that's not a good sign. Okay, so you had Brexit concerns. Okay, you had geopolitical concerns, you had Asian markets down and global markets into resistance, and obviously this concept of QE not being what everybody expected it to be, okay, and not being the amount everybody expected it to be as well. Okay, so again, these are all scenarios and conditions that we had, and that all indicate risk off. Therefore, once you understand the markets in a risk off state, then you can just short the market based on your technical patterns. Okay, so that's the reason. That's what occurred. So the outcome overall, we had the European markets down, but we did manage to recover towards the end, as you can see here. The FTSE managed to recover as well. It went as low as 65 to 50 region at one time, 5560 region at one time. Okay, the Hang Seng obviously down -1.5%. The Shanghai obviously down. The MySex managed to initially did hold on to some gains, but eventually managed to finish in the red as well. The Nikkei, just going to ignore that for now because Shanghai is the main mover. Okay, obviously we know US markets are closed, and with regards to the Athens stock market, it did manage to hold into the green, and also the Swiss market also managed to hold into the green. Hence the reason why we had a recovery later on. The reason why we had a recovery later on in the day is simple. Okay, we had comments out of the European members or policymakers promoting QE, and Mr. Hollande talking QE up. Okay, we also had comments with regards to Ms. Merkel, with regards to her keeping Greece in the Eurozone. Okay, so all these scenarios, obviously, well, not scenario, but all that type of news flow is bullish for markets. Hence the reason why we continue to short squeeze higher, because it's all about the Kool-Aid. Okay, okay, so that's basically how it occurred. Initial sell-off because of Shanghai, and then obviously short squeeze rally towards the close because they're talking up QE, and obviously stating that Greece will remain in the Eurozone. So these are all positive comments towards some sort of solution. Okay, now where are we technically? So let's start off with the German DAX, because I think that's the most important chart right now, given the fact that we have to discuss and contemplate now, is this a breakout or a fake out? Daily chart, you ended up with the doji. Okay, we've obviously smashed through all this resistance, smashed through gap fill, smashed through double top. Okay, so we have to respect based on the price action. This is very, very important. Okay, from that perspective, so we must respect it for what it is. Okay, so if this is a new high based on price action, then it's a new high. Okay, that's a tape. You can't fight the tape. No matter what you think fundamentally, you can't fight the tape. The only time you would shift to the bearish side in this market, this is very important, is if we retake or go on beneath the previous high. Then we can say, okay, it was a fake out. Technicals are now confirming fundamentals. Therefore, this is a fake out. This market is going to reverse in the opposite direction quite powerfully. Okay. Now the weekly chart is quite interesting because obviously we are into that resistance zone, so a rising contracting wedge. So again, you can't argue if this is a rising contracting wedge and it's a breakout lower, then this is a fake out. Okay, but for now, we give it the benefit of the doubt. Obviously innocent until proven guilty. Having said that, the German data, I mean, their balance of budgets has broke even after a long time, since World War II, I think it was. Also, with regards to their GDP, it's remained strong. With the lower euro, obviously, it's going to help the German export machine regardless. So there certainly are arguments from a fundamental perspective, adding the fact that you're getting QE now in the eurozone, and obviously if the European members are more healthy, then obviously they'll consume more and increases their disposable income. Where do you think it's going to go? It's going to go in German coffers, okay, because that's the export machine. Okay, so if you look at it from that perspective, then it makes sense for Germany to be leading and moving higher. So we have to respect it for what it is. Okay, regardless of what we think of whether it's a watered down QE version. I mean, that's my perspective of things. Certainly is a watered down QE version, or version of QE, and not what a lot of individuals are expecting. And also with regards to Greece not being involved in that QE program as well. I mean, what does that mean? What sort of given the fact that the Swiss National Bank has preempted the QE move, okay, and or have they actually preempted the QE move, or have they actually preempted a Grexit? So again, these are all questions that we have to sit back and realize. I mean, it's going to be interesting. Okay, I mean, just now, I mean, we have a poll, GOP or GPO poll. Should Greece stay in the eurozone at any cost? Yes, 80%, and previous 75%. So it's certainly increasing. Do you believe Greece must stay in the eurozone at any cost? Yes, 80%. So this is all interesting. This is interesting how the news now is being spun towards a pro-Greece or being lenient on Greece, or coming to some sort of solution on Greece, and that's the reason why we're getting these new highs in the markets as well, because that's more than likely being front run to a large extent by the traders or investors. Okay, so daily chart must be respected. It's a breakout. Let's have a look at it. 60-minute chart basis. 60-minute chart, I mean, higher highs, higher lows. Only thing I would watch out for is certainly, given the fact that there may well be a disappointment, or given the fact that the number is not as expected, etc., etc., with regards to QE, there may well be a possibility here of obviously a HNS formation, in order to close this gap below. So watch out for that. That's one thing that we certainly must watch out for. Keep an observe, keen eye, eager eye for, eye out for. Okay, so potential for HNS. Okay, now let's have a look at the European markets again. Continue to do so. Let's have a look at the French CAC. Same pattern in the French CAC 10-minute. Watch out for the HNS formation. We have a doji. We have broken out this key trend line though, so we must respect that for now. We have broken out that key trend line. We've also closed a gap fill resistance as well. Okay, only resistance I can see now is going to be at this 4428. Hence the reason why I shorted the market at that level. Okay, today you have this resistance level up here. Okay, and that's about it for now. Okay, so there are your horizontal resistance. So you're working off 4428, call it 4430 just to round things up, and then obviously the next resistance level above is 4500. So we watch out for that. Okay, but like I said, keep an eye out for the 10-minute HNS formation. There's your left shoulder head, potentially for right shoulder, and obviously down we go with regards to that. Okay, so let's just get this cleaned up. Okay, so that's basically where we are with regards to the French CAC. The Euro stocks, okay, bring up the chart. The Euro stocks. The Euro stocks have, I mean, I did hold this as resistance, and that's really one of the reasons why I shorted the market today. Obviously, like I said, I was supported by the Shanghai being down, limit down 10%. There is a gap fill level here at 3250. I mean, that's solid resistance from my perspective. So keep an eye out for that. That should hold as resistance, and obviously if that breaks, then we go above. You've got the next level at 3290. Then obviously above that again, you can see this level at 3316. Very much doubt that we actually go to that level though. Bear with me 1 second. Just draw this correctly. Okay, so it's connected this bit high. So again, if you do push high, then you're looking at 3250, 3260, and obviously gap fill resistance. So that's going to be very interesting. I'm surprised though we didn't actually close that gap today. So certainly some weakness in the Euro Stoxx 50. So watch out for that. Okay, folks. So a 10-minute chart. Quickly brief you on a 10-minute. I mean, let's have a look at a 60-minute. Same type of pattern here. 60-minute here. So certainly some sort of signs of exhaustion there. 10-minute chart. This is going to be very, very interesting. Get rid of this. Okay, so basically we are potentially forming, I mean, potential breakout here. Looking for your HNS pattern again. So your left shoulder, obviously, your head, your right shoulder being formed here, and then obviously down we go. Look out for that pattern. Okay, if we do break down, then we'll see. I mean, percentage test of 200 MA, then we'll see exactly where the market goes thereafter. Okay. So that's your European market wrap up. Okay, now let's have a look at the FTSE 100. This is the important index. Okay, horizontal resistance, given the fact that oil is still at 47. Copper really didn't. Let's have a look at copper. I mean, copper was hit due to the Chinese sell-off overnight, but held its own. So respect there must be given. Okay, your commodity currencies certainly did get a bit of a hammering with regards to obviously China being down overnight. So slightly negative there. Although the Aussie is more stronger than the Kiwi, so watch out for that, folks. And those that are trading the Aussie and the Kiwi, that's the reason why I shorted the Kiwi today, not the Aussie, given the fact that it's more weak. But having said that, I mean, given the fact that Shanghai is down 10%, they are holding their own, so pretty impressive there. But having said that, obviously the inflation data last week out of the US was pretty weak, so certainly an argument there. And anyway, I'm going off on a tangent, so just keep an eye out with regards to that, okay? And also the CHF move is quite important as well, but I'm not going to dwell on that. Okay, so FTSE 100 horizontal resistance must be respected here around the 6580, 6590 level. Obviously, if you break above that, then the next level you're looking at is 6640. So watch out for that. Okay, 6640 bias does slightly have to be on the bullish side because you have broken this key trend line. So again, you have to give it that initial bias. Only way we can really move higher is based on oil. Having said that, just bear in mind that we do have geopolitical events in Russia, Ukraine, Israel, and obviously Syria. Okay, so they are going to be supporting oil. So if oil is going higher, then FTSE certainly has a chance of moving higher as well. Okay, so always bear that in mind. So again, I'm going to remain flexible. I'm a day trader. I'm not going to have any real inclination with regards to which way the markets will go. I allow the markets to dictate based on news flow and obviously how the Asian markets and global markets move. Okay, at present, I mean, obviously they have talked up QE and they've talked up a anti-Grexit, so therefore slight inclination of bias would be towards the bullish side, but again, it's best to remain neutral at this juncture. Okay, for now anyway. Let's just be, especially given the fact that US markets are closed, There's no real sense of direction. Okay, so FTSE All Share seems to be making an inverted head and shoulders pattern here. So this is giving me, just looking at this chart alone, gives me a slight bias bullish, given the fact that you've got this pattern here. Obviously, you're looking at potential inverted head and shoulders formation here. So look at this from here to here, and obviously we're looking to potentially break out. So right shoulder's holding here. We've held a double bottom here, so you're looking for a higher low and a thrust higher. That means that the FTSE 100 will certainly move higher as well, given the fact that they're interrelated. Let's have a look at the FTSE 250 today. Let's see how that's done. Again, quite an impressive move. We've had a failed bear flag. When you have a failed bear flag pattern, then it generally means that we're going to short squeeze in the opposite direction. Now the FTSE 250 has been strong anyway, especially given the fact that obviously sterling has been absolutely butchered as of late. Even though we've broken out of this, bullish channel, it still managed to have a failed bear flag, and now it wants to potentially create this inverted head and shoulders continuation pattern higher. And given the fact that sterling is so low and exports are certainly thriving, adding the fact that you've got QE from the European or Eurozone, then obviously this helps the exports even more. Okay, so certainly a catalyst for the FTSE 100 to go higher as well. FTSE Volatility Index, as we all know, I mean, how many times do I have to clarify this? I think all of you are more than aware now, and I don't like to patronize. You all know the inverse relationship with volatility and the index. So when the volatility index is now showing you clear resistance, and obviously has held resistance and put in topping tails, it's telling you it wants to go down. If it wants to go down, what do you think the FTSE 100 will do? Yes, you guessed it. Okay, it will go up. Okay, so it moves inverse to the volatility index. So the volatility is starting to be reduced, given the fact that obviously Eurozone is coming to a conclusion. Brexit looks like we've got some sort of solution there. Now the only two obviously scenarios are that if the SMB or CHF decision brings out more skeletons out of the closet in terms of losses, banks, brokerages, etc., and that obviously creates a risk-off sentiment and sours the mood and the momentum. Adding the fact that you've got geopolitical concerns ongoing, if they start to escalate, then again that's negative, and if oil starts to rapidly rise, again that's negative. Again, if China gets hammered again overnight, we all know that's going to create a risk-off scenario. So there's so many permutations, so many different ways in which this market can move. We just have to remain open. Obviously, always remain open-minded and be flexible. Okay, never marry a opinion. Always have your divorce papers ready. And I'm not going to encourage polygamy. I'm just saying you have to be flexible. Okay, right. So FTSE 350. Let's just quick overview there. Here we go. FTSE 350. Like I said, same type of pattern there. Is breaking out. Next resistance level is a 200 MA, so therefore bullish bias, and you got horizontal resistance around the 3620 level. Right, so go back to the FTSE 100 now. Go to a 60-minute chart. Okay, 60-minute chart is here, so we're looking to break out. Obviously, we've broken out today. We're holding above. You can see this bottoming tail on a 60 minutes, quite bullish. Okay, next move is going to be up here. So you've got a resistance up here at 6640 and 6660. Unfortunately, my 10-minute price, one of the reasons why I have to use Pro Real Time, the IG Index is Pro Real Time, is because I can manipulate the data between 8 to 1630. For some strange reason, my Pro Real Time, although it shows it on my European markets, it will not show my FTSE 100 gap levels. It always some sort of glitch. Okay, I've complained to them many times, but they don't show it. So let me just quickly get that chart for you. 1 second. It should be saved here. Let me just quickly show you that gap. That gap is quite important because that gap is acting like a magnet for price action. Okay, so let me just quickly show you this gap. This is the difference between IG Index adjusting the market hours, and this is the difference in Pro Real Time. Slight glitch. This is why I tend to have both charts running only for the FTSE. Every other indices is fine. I'm not sure why. They have acknowledged it's a fault, and they are trying to correct it. So let's just show you this. So this is a 60-minute chart, and this is a 10-minute chart. So let me show you this 10-minute chart. Where are we? Actually, it's 10-minute chart. Okay, 10-minute charts are relevant for now. That will be fine. Just bear with me. Let me just show you this. But I do think it is quite important. Okay. Okay, got it now. I have got it. Okay, let's get this open and hopefully I can show you, because this gap on the FTSE is going to be quite important. There you go. Okay, so hopefully you can see that gap there. The gap is at this level. Okay, it's not really saved it the way in which I want it to save it. Okay, 1 second. One second, I'll just try this again. There we go. Start again. Okay, we finally got it. Okay, here we go. This is the gap that I want to show you. So you have a gap at around the 6460 region. Okay, 6460. What? 6650 region. Sorry, not 64. Okay, so it's exactly 6636 to be precise, and that's basically what this market is honing in on. Okay, the same thing that where it's honing in on the Euro stocks, because obviously technicals do matter, folks. Technicals are very, very important to a certain extent. Okay, so can you see that gap there? That's like acting like a magnet. So it needs to close and move up to that gap and close it. Now, given the fact that everything is interwoven and everything has a lag, so sometimes one will lead and one will diverge and one will converge in terms of the indices themselves, then as you can see here on the German DAX, given the fact that the German DAX not only has it smashed through its gap fill, which was here, it's actually gone and made a new high. So therefore the Euro stocks is playing catch up. Okay, the same thing with the Nasdaq as well. Given the fact that the Nasdaq and DAX are interwoven, then they are both playing catch up. Okay, so there's a gap below which is ignored and held this resistance or support level here, and now it's going to create an outside bar and test this upper level at 4,200, potentially even break higher and start to test the 4,300 level. So the US markets are certainly lagging behind European markets. So either one of them is Pinocchio. Either the European markets will be a fake out and it will be a powerful reversal led by the US markets with regards to Nasdaq closing this pivot low here and closing this gap level here. Okay, or the European markets will continue their rally and move higher, and obviously European markets will then have to play catch up, and money will start to pour into that market itself. Now it is cheaper obviously to buy European stocks right now with regards to the currency, etc., etc. So one could argue, okay, that's the reason why the divergence is there. Yes, true, but given the fact that the economic data is supporting the US to a large extent in terms of growth and so on and so forth, so money should also be pouring into here with regards to that. Although having said that, you can play the QE trade, which is probably more profitable but more risky to a large extent, even though you do have a central bank put in Europe. But again, that's a different argument. Okay, so just keep an eye out for that. Okay, so that FTSE gap fill is very important at 6640 region, so keep an eye out for that, folks. Okay,